Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
All right, everybody, we got a great show for you today. We're going to talk about decision-making in family offices. It's quirky. It's not easy to figure out, but when you hit it right, getting the family office and the next gen and the gen after that on your side, as well as their consultants and decision makers, that's the important thing to get your deal done. This is episode 869. So we're on episode 869. I want to thank our friends at Warren Henry Automotive. Had a great meeting last week with my good friend Larry Zinn. We're working together on a whole bunch of different business initiatives. Nobody knows the car business like my friend Larry, his partner Eric, and the patriarch of the Warren Henry Automotive family, Warren Zinn. They're just tremendous people. And if you're looking to buy or lease a car, go over to Warren Henry. They've got Land Rover, Range Rover, Lincoln. They've got great and Jaguar. They've got great cars, and you become a member of the Warren Henry family. A special shout out to my personal service advisor, Gerald Henry. He's amazing. Remember, we're going to be streaming today live on LinkedIn, Facebook, Twitch, Instagram. When we're done, if you missed today's show, you can catch it on all the podcast platforms. And now on to the show. All right. So we're talking about the family office decision-making process. It's actually very complex. There's all kinds of different things, balancing finance, balancing personal wealth, balancing values, relationships, and long-term legacy. And there's a lot of key issues. The number one issue, and we talk about this all the time on Freed on Business, one of our themes, alignment, value system alignment. You have to make sure that the transactions that you're presenting align with the value that the family office has. And maybe the patriarch of the family office made their fortune in a certain specific industry, but many times the next gen or the generation after that operates outside of the family's core business because they're looking to match the yield that the family patriarch created in the original core business, and they just can't unless they go out and do the real estate business, which is a way to really swing for the fences. You got to make sure that you understand the governing culture within the family office, who has the authority, how are disagreements is resolved, how are decisions made. You have to understand the risk tolerance and the time horizon. I work with one family office that literally has a 250-year family trust that they do business in, and these are absolute multi-billionaires, some of the most famous families in the country, and their time horizon is relatively infinite, but their risk tolerance is extraordinarily limited, because they believe in the power of compounding. And even if you get $1 and compound it over 250 years, I think you made a little money. You have to understand what the succession planning is. A lot of the family offices I deal with the next gen, and I make a joke. I say, hey, you're really working for your son. He goes, you're absolutely right. You're absolutely right. Because usually what happens is they're working for the next gen and they're putting it in, they're making their profits and sometimes even create a tax vehicle, which I'm not a tax person. You should talk to your tax planner if you want to learn more about this. But they create a vehicle where it's in the child's name and it grows in there on a tax deferred basis. In fact, we always have Tom Handler on, and he talks about that all the time. We're going to have to get Tom Handler back. Miami Podcast Studios. Make sure you remind me of that. There's always the emotional and interpersonal dynamics. There's in every family. I mean, come on, I grew up in a family of 3 kids. There's always some kind of competition and family dynamics. So you have to understand the pecking order in the family. You have to understand how they interplay, how they interact, who's who, why they're that way, what the different personalities are, because it's all different. I can't, again, talk to you about the tax and the legal and regulatory considerations. Suffice it to say that there's a variety of different structures that you can use to put together the family's wealth, to invest it in transactions, both real estate as well as corporate and private equity transactions. You got to balance this is a terrific one. I just ran into this one, the liquidity needs versus long-term investing. Remember, I just talked about the family that has 250-year trust. There's other families that want to have a investment platform, but because all their money is tied up in securities, they really don't have a lot of cash. A lot of the real estate families I work with are asset rich and cash poor. Part of what I do for them is help them monetize their assets that are illiquid so that they have additional investment capital. It's very important to be transparent and have good communication on almost every family office phone call and every family office decision process that I'm involved with. We always talk about the children's game telephone, because if you're not talking directly to the decision maker or the people on the decision maker, the family office's decision committee, they're going to hear it from somebody else, and they may not get the picture described the way they need or the way you need, and something may be lost in the translation. And then you have to understand the legacy and impact goals. A lot of family offices, after they've made the money, want to have a very positive impact on the environment and the community. And I'll use some terms that are sometimes out of favor. They really want to have an ESG focus to make the world a better place by reducing some of the environmental and other impacts that help to move the world forward in a more egalitarian way, I guess would be the way to say it. Consistent decisions, keeping them fair and aligned with the family's long-term vision is very important. Now there's best practices. You got to understand how to separate family decisions from business decisions. Maybe you need a family council that talks about how to implement their business decisions to be consistent with their values. You need to make sure that the family decisions are not made at family events. I always say that family money is always the most expensive because you got to talk about it at Thanksgiving, Christmas, and Passover. So, sometimes you just don't want to bring that in. You need to establish a clear governance framework. A lot of times the families I know have a couple of good outside directors that are not involved in the family that are subject matter experts, depending on what their investments are. They have all kinds of different rules and decision structures. Maybe they give the authority to the next gen key person to be X amount of dollars, and above that dollar, you got to cobble it together with other family members and have them make the decision. All of this goes back to the thing about alignment of values and understanding the decision process. At a certain point, the decision process becomes professionalized. I just talked about that because I just talked about the fact that a lot of them hire outside directors. In a real estate deal, it may be a owner's rep. If it's a development deal, it involves constructions. You got to make sure that you have a committee that involves the different family members so that you can build consensus so that the decisions are supported and the family moves together instead of fracturing. A lot of times these families fracture. I was with one family office attorney the other day, and he had to excuse himself because he had to leave to go resolve a family office problem that came up when one of the family members was divorcing another one. And how do they allocate the assets and keep the assets in a format that still accrues to the overall global family investment strategy and values, while giving the divorcing member the ability to settle their divorce and not have the divorced family member be involved. These are just critical family decisions that you need to have involved. You need to define how you're going to manage risk, how much is going to be concentrated, if it's real estate and apartments, retail, office, industrial. Maybe there's another thing that's a business that you want to invest in. Maybe you want to invest in a bank or some type of infrastructure investment. All these things come together, and you need to have what's commonly known as portfolio theory, not only in the real estate portfolio, but in the global family office portfolio. When you're in a real family office, when you go and you got an equity trading desk there, that's because they're all doing different silos. Again, and we talk about this with Tom Handler all the time, you have to talk about planning the succession early and having it being transparent so you can allocate the business structure so that it benefits all the generations. A lot of the banks and family office clubs that I'm a member of, they have family office, family education sessions where they talk about the big thing now is health and wellness. So not only in Miami are they building these condos that focus on health and wellness, these banks and other investment vehicles for family offices are having conferences in places like Aspen, where they bring in family longevity experts and health and wellness experts. And here's another thing, the rhythm of communication. A few weeks ago, we did something about the power of a callback. It works on the inside of the family office. So you need to have good family office communication, again, alignment of incentives and accountability. and preserve the flexibility of investing without abandoning the discipline. And that's the most important word in a time like this, where it's difficult to see what's going to happen in the economy. You need to be disciplined. So what's the bottom line? Stick with us. We'll be right back with the bottom line after this word about Warren Henry. We'll have what the real bottom line focus is when you're dealing with a family office. Miami Podcast Studios, take it away. I want to talk about our friends at Warren Henry Automotive. I want to thank Warren, Eric, Larry, Gerald, Ismet, all my friends at the family office that is Warren Henry Automotive. I got to really give a high five to Warren for empowering his next generation, Larry. That's the third generation in this family, and it's incredible. They have a beautiful alignment of interest. When I was looking for my wife's kidney, the Warren Henry folks, they're members of the National Kidney Foundation. They helped me get educated. They helped me reach the right people. They helped me feel calm and comfortable. I would sometimes sit in Warren's office with him, and we would just talk. He was a warm, wonderful person who really helped me through it. And to this day, Larry and Ismet treat me with kindness. And Gerald, the person I deal with the most, my service advisor, he always makes sure I feel like $1 million. It's an incredible thing to be part of the Warren Henry family. Those values have gone through Warren, gone to Larry, gone through their salespeople. They don't even hire somebody that worked at another auto dealer. They want to instill their value system in all their employees, and their employees are very loyal to not only the Zinn family, but to the members of the Zinn family that are known as the clients of Warren Henry Automotive. So if you're looking to buy or lease a car, call my friends at Warren Henry Automotive. Their flagship store at 151st and Biscayne, Land Rover, Range Rover, Jaguar. I got my wife, I got my Lincoln there. I love my Lincoln. It's absolutely tremendous. I highly recommend the vehicle. It's great. I love it. It's like driving a computer. So remember, if you're looking to buy or lease a car, go to Warren Henry. Join my beautiful wife, Vivian, my mom, lots of my clients and friends. We're all members of the Warren Henry family. You should be too. Always the best service, always the best price, always Warren Henry.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
I want to remind everybody, I'm Jim Freed. I'm the founder of Sandstone Realty Advisors. We help family offices from across the world design and implement their business plan, from private equity to real estate. Give me a call. There's my stuff. My contact information is below. Whenever you call me, it's always about you and always about your family. You're hearing how I have a perspective on family office business. It starts with love and kindness. I love the people that I work with, the family, the Warren Henry family, the Zinn family. I love them, and I hope I've been able to build that kind of relationship with them. And that's what I do with all the people I work with. So reach out to me, give me a call. I'll bring that independent person to your family office, and I have the credibility of billions of dollars of transactions behind me in all the various real estate and private equity sectors. I can help you build your business. I'll be consistent with your family office values, and I'll make sure that all the generations communicate effectively together and are supported internally. And now, remember, you can always find, if you missed anything on today's show, you can find it on all the podcast services, all the platforms, Spotify, Apple Podcasts, YouTube, which is where I usually watch the show, on YouTube. So reach out to me. And now, what's the bottom line with family office investing and working with family offices? The answer is the family office is both a family and a business. The family has got to move away from using just good judgment and have defined best practices and structures for evaluating transaction. They need to have consistency across the generations on how they interact and how they do business. They have to project stability, and the person that's the point person for new business in the family office needs to have the image in the marketplace that they are a decision maker and that they can bring the family along, and that it's an easy process when you work with that particular decision maker who knows how to build consensus and operate the internal family office decision making process. It's a complex process, but if you work it right, it's a way to really tap into the generational wealth that's transferring at a record pace here in the United States and across the globe over the next 20 to 30 years. So remember, look out for me, Jim Fried. I want to remind everybody that the person who wants to do something finds a way. The other finds an excuse. Now go out there and make it happen. God bless you, and God bless the United States of America. Miami Podcast Studios, the rest of the show is yours.